The US Treasury just pulled off something massive. Not a headline, a magic trick. And whether you realize it or not, it's already hitting your wallet, your retirement, and everything you thought you knew about safe investments. Here's the thing, while everyone's watching the Fed raise rates to fight inflation, the Treasury's been secretly undoing it all. They'll never admit it, but if you follow the money, the truth is impossible to miss. Let me break this down real simple. You know how the government borrows money? They sell bonds, basically IOUs. Usually they sell a mix, some that pay back in 30 days, some in 10 years, some in 30 years. But here's what changed. Since 2023, they've been borrowing almost only short term, like pay me back in a few months short. Think about it like this. Instead of getting a 30-year mortgage for your house, you're using credit cards. And why does this matter to you? Because when the government floods the market with short-term debt, it's basically printing money without actually printing it. Smart economists calculated this trick is worth about $800 billion in fake stimulus. That's like the Fed cutting rates by 1%, except they didn't. They were raising them. So while Powell's at the podium talking tough about fighting inflation, the Treasury's in the back room doing the exact opposite. No wonder your groceries still cost a fortune. No wonder the stock market won't crash like it should. And no wonder your savings account still pays peanuts while everything else gets more expensive. But here's where it gets really wild. I'll tell you about Robin. She's 62, retired school principal from Oregon. Did everything right. Her advisor put her in the safe portfolio. You know, the one for people close to retirement. 40% stocks, 60% bonds. Bonds are supposed to be boring, safe, the place you park money when you can't afford to lose it. By late 2023, Robin had lost $190,000. Not from some tech stock gambling, from bonds. When she asked her advisor what happened, he just shrugged. Interest rates, he said. But here's what he didn't tell her. Those safe bonds got crushed because the Treasury and Fed are playing tug of war with the entire system. And people like Robin, they're the rope. Now here's the scary part. Right now, $8 trillion in government debt needs to be paid back in the next 12 months. That's trillion with a T. And to put that into perspective, that's more than the entire economy of Germany. And remember, they're doing this with short-term loans, credit cards, not mortgages. Every month, they need to find new lenders again and again and again. What happens when the credit cards come due and nobody wants to lend? Trump's Treasury pick, Scott Bessent, already said he won't sell long-term bonds at these high rates. So they keep rolling the dice with short-term debt. It's like refinancing your house every 3 months and hoping rates don't spike. Except it's not a house. It's the entire US government. But wait, it gets even crazier. Because once you flood the system with all this short-term debt, you need buyers. And what the Treasury did next? Well, let's just say if you or I tried it, we'd be in jail. They're literally buying back their own bonds to manipulate prices. And foreign governments, they're in on it. I'll show you exactly how this works in a minute, but first, you need to understand why this matters to your money right now. Remember 2008? The government bailed out banks? Well, they're doing it again. It's just sneakier. You see, in May 2024, just last year, the Treasury started something they hadn't done in over a decade, buying back their own bonds, up to $30 billion every few months. And here's the scam. They announce which bonds they're buying. Then, surprise, foreign central banks start buying those exact same bonds right before. It's like insider trading, but legal. This creates fake demand, pushes prices up, makes it look like everything's fine. During market stress, they crank it up to $10 billion a week. They're literally printing money to buy back their own debt to make their debt look more valuable. If a company did this with their stock, the SEC would shut them down. When the Treasury does it, they call it market operations. But here's the part that should really make you angry. The Fed and Treasury are supposed to be independent, like church and state. Instead, they're coordinating behind closed doors. The Fed times its moves around Treasury's schedule. When Treasury needs help, the Fed magically provides liquidity. When Treasury pulls money out, markets tank. Your mortgage rate, your 401k, your savings, It's all getting jerked around by two government agencies playing games. Here, in May 2024, the Fed, coincidentally, slowed its balance sheet reduction right when Treasury needed help. That injected $270 billion into markets. No vote, no announcement, just done. Look, they keep saying the US won't default. And they're right, we won't, because defaulting is loud, it's obvious, it makes headlines. Instead, they're doing something quieter. They're destroying the value of every dollar you save. When the Fed prints and the Treasury manipulates, your money doesn't disappear overnight. It just buys less and less and less. That's what Robin discovered. That's what millions are about to learn. The game isn't rigged against you because they want you to lose. It's rigged because they need you to lose slowly enough that you don't notice. But now you know. And if you want to see exactly how this ends, how they'll steal your savings without ever technically defaulting, watch this next. Because once you see their playbook, you can't unsee it. And doing nothing, that might be the riskiest move of all. Thanks for watching. Take care.